Good morning, good morning. How you guys doing? Welcome back. Yeah, it's been a while since we did our live show. Last week I was out of commission for a bit. Wasn't feeling well for a whole week. It was kind of crazy. But we're back at it. Got some work done this weekend. Did a report for this latest CFTC data that was released on Friday. And yeah, been back on the saddle. So we're going to look at the markets overall. We're going to do a brief overview of what I see taking place. We're going to apply the Sherlock analysis process to the charts. We're going to take a look at the biases, short-term, medium-term, long-term biases, according to the buying and selling by the big institutions. And hopefully that'll give you some insight as to what we're expecting in the markets in the next few weeks or so. So again, welcome back. If we could hit the like button and start this episode off by doing that, I would appreciate it. First thing you see when you look at the chart is you should probably be able to see the chart of gold. And so we've been talking about gold for a while now. And one of the things that I was pointing out was what we saw taking place on the daily chart. So on the daily chart, we have some demand that came into play. We have some supply that was created above. And we basically had price come down into the area of demand. It responded to demand. We see the buying that took place. And price has since been moving to the upside. Okay, so now we have supply that is in play. So if we take a look back, and we just look at the time frames, the different time frames, to determine what is likely going to take place. We look at the monthly time frame and we can see that it is bullish. Okay, it's moving upwards. We have a trend to the upside. There is no supply zones, so it is bullish. So longer term time frame, bullish. Longer term bias, bullish. Okay. We look at the weekly time frame and we see that price has been consolidating somewhat, or ranging, or just trading sideways for quite some time. But at the end of the day, price was moving upwards before we got into that situation right here. And so it's bullish. Medium term, a medium time frame bias is bullish. Now we have the daily chart. So daily chart, like I was mentioning, we have it in a range. Okay. Price contacted demand. Short-term momentum was to the upside, so it rallied. It contacted supply. So short-term momentum is likely going to be bearish only because supply is currently in play. But because we don't know for a fact if price is going to drop, because when you have price in a range, can it continue to hold a range? Yes, it can. But there's nothing strong to dictate a very specific direction in price. So when price is in a range, I typically look at it as neutral, okay? Because it can go up, it can go down, it could break to the upside, it could break to the downside. It's very random, so we're not going to speculate on what it's going to do. This is the chart you have to wait for, okay? When you know the other charts are bullish and you're waiting on one time frame, then that's the chart you should be keeping your focus on. Now, if we look at the 2-hour chart, it's telling us a different story. It's telling us it is bullish. Why is it bullish? Well, trends are to the upside. Demand zones are being created. Price is retracing to demand zones. Those zones are holding, and price is moving to the upside. So everything is bullish in terms of gold. Only thing is, we're waiting on one time frame to give us bullish signals. Okay, now let's switch over to the euro. Euro, it's a little bit of a different story on the euro because recently on the monthly chart we had some supply being contacted. So there is a slight bearish bias here. But remember what I was saying on gold with respect to the daily chart. When it was ranging, it's the chart that you're waiting on. Now, on the monthly chart of the euro, we can see that supply was contacted back here a couple times. And so therefore, the bias has been bearishness. over a longer period of time. But thing is that we've received a little bit of a push to the downside. It stalled, price retrace, and now for the second push to the downside, it has stalled again. And when we take a look at the weekly chart, there isn't anything very prominent sticking out here on the weekly chart. We've had supply zones being created. We've had demand zones being created. None of them are being respected. And so when you can't have zones hold, then, you know, everything's up in the air. So when it comes to the weekly chart, I would be painting it with blue, okay? Means neutral. It can go up, it can go down. There's no rhyme or reason. If I look at the daily chart, I do the same thing. Neutral. No ups, no downs, no rhyme, no reason for it, okay? 2-hour chart, short-term momentum. We had some demand. It popped through. It broke through. There's no structures here that are holding, so nothing sustainable on the euro chart. So at this time, trading the euro, in my opinion, is not high odds, so we move along. US dollar, Japanese yen. So we recently got a drop in price, and some media outlets were reporting that the Bank of Japan has come in and stepped in and is trying to support the yen. Okay, but here's the deal. Price is dropping, right? Okay, but where is price dropping from? It's just not randomly dropping from nowhere. We had supply in play. Okay, supply was contacted. What typically happens when supply is contacted? Well, price usually drops from supply areas. Those are areas where typically we see profit taking from long positions being taken. And so any type of a drop from a supply after the institutions were accumulating a long position really isn't much of a surprise for me. I was expecting some kind of a drop. So do I think it's the bank coming in to support? I don't think so. When you look at the CFTC data and you look at what the big institutions are doing with price, it makes complete sense why price is dropping, okay? I don't think the Bank of Japan is coming in to support. Could they be? Sure, they could. But I don't think that's the main driving factor. And when you focus on that being the answer, I think it takes away from you seeing what's really taking place on the charts, okay? The banks were long. They need to take profits on positions. We contacted supply. Price is dropping. All right. Let's take a quick look at Bitcoin. Bitcoin's an interesting one. We had price stalling at the highs. We had been talking about this one before. In fact, we were looking at the weekly chart, and I was talking about this price action up here. Okay. The stalling, the push down, the stalling, the push down. And I told you this was very, very reminiscent of what we see on the charts when price is about to drop. Okay. So we got the drop. It fell short of hitting some demand. We see a pop up. Is this going to be sustainable? Well, let's take a look. When we look at the daily chart, what do you see? I see a supply zone that has just been taken out. So it opens up the chart for a move higher, but does it mean price is going to be moving higher? It doesn't necessarily mean that price is going to be moving higher at this point, okay? There is room for price to drop over time to a significant area of demand down here. I think that would be a better area to see price launch from to the upside. The fact that it just fell short of hitting this demand on the weekly chart, you know, it would have been nicer that it actually came down and hit the meat of that demand zone. So I'm a little bit iffy about whether or not we're going to see a sustainable move to the upside from here. 2-hour chart has supply in play. It has dropped price, so short-term momentum has been to the downside. I like to wait a little bit longer and see how things play out. Like I said, I'd prefer to see a bigger drop in price before even considering going long. All right. S&P 500. Bullish. Price is moving up. There's nothing to indicate that this momentum is going to slow down. Absolutely nothing. Demand zones are being created. The banks are coming in and they're buying at their demand zones, and they continue to push price higher. This is a very nice, sustainable chart that's being presented to us here. Very, very nice. Buying is taking place, and it's being supported by continuous buying every time the market drops. So whatever the media wants to tell you about 20% drops, all this other nonsense, just ignore it. Totally ignore it. It means nothing, okay? I wouldn't even be paying attention to that. Dow Jones, we've been talking about Dow Jones for some time. Look at the weekly chart. Remember what I was saying about the weekly chart? We had supply in play and it was holding price down. Well, look, it's just been removed. So it has opened up the floodgates for a move even higher, okay? Even higher. Let's take a look at the 2-year. This is the 2-year yield. And we can see on the daily chart, we have price moving to the downside, supply zones being created, a demand zone is here. Looks like it's just about to be broken through. If it does break through, we're going to have more weakness, okay? More weakness where price will come down and retest this area of demand that was recently contacted on the monthly chart. This is why we had that bullish momentum to the upside. Remember when bonds were dropping and everybody was saying, oh, that strength in bonds is disappearing. This is going to continue lower. And I was telling my members, it's not going to continue lower. It's going to be some weakness for a short period of time until it strengthens again. And we got into our positions, and we've been holding positions for quite some time. Won't go into too much detail with that. That's more for members. But I want you to stay focused on this. If you're trading bonds, this looks like it's going to be dropping even further. So we got our eyes on that. We're expecting bonds to continue going higher over time. Berkshire Hathaway, I told you, be careful. Watch this one. This one's going to jet to the upside soon. And it's exactly what has taken place over the last few days. It consolidated over a long period of time. Well, what am I talking about? Several weeks, okay? Where it looks like price has been being accumulated at that level. So the 400, 420 area, it's been being accumulated. And now we're seeing price jet to the upside. I'll be looking to buy this one when it retraces to areas of buying. Was looking at the Wall Street Journal this morning, some headlines with respect to Goldman Sachs and BlackRock. We've been talking about how the financial sector was very strong. We could see it on the ETF for the sector that supply zones were being removed, opening up the floodgates for a move higher. And now we see this is exactly what's going on. So BlackRock's profit rose to the second quarter. So here's the chart of BlackRock. We still have some supply here, short-term supply on the daily chart that needs to get through. Once that gets through, we have supply here in the 900s on the monthly chart. I would not ignore that. So the headlines are coming out saying all these good things about it, but we're heading into major supply. So just be careful if you are trading BlackRock, okay? And with respect to Goldman Sachs, headlines were saying they posted a 21% increase in investment banking revenue in the second quarter. It's moving up. It's looking good. There's no supply dropping. There's no supply that's holding price, dropping price, or even created on the charts. It's all upside from here. New demand is coming in. Fresh buying is taking place. I'm interested in buying this stock. I want it to go higher first and then eventually retrace back down towards areas of demand. And once it gets down to areas of demand, I'd be interested in buying up the stock again. All right, ladies and gents, there you have it. I'll leave you at that. That's 12 minutes. I'm going to continue recording, and the following recording will be available for members. I'll review some of the charts that we were just reviewing, but I'll go into more detail and discuss the actual buying zones that I'm going to be looking at buying these markets, and some extended analysis for members only. Okay? So that's it. I'll leave you with that for now. And until next time, you take care. Thanks for joining. Hit the like button again. I'd appreciate it. And we'll leave you at that.